I'm Sarah Borkson-Keto here in San Francisco for REIT World 2018, NAREIT's annual conference. I'm here today with Joe Margolis, CEO of Extra Space Storage. Welcome, Joe.
Thank you.
And acquisitions continue to be a driver of the company's external growth. Do you expect 2019 to see a similar pace of acquisitions? And what are some common trends you are seeing in the market?
The acquisition market is challenging this year. There's a great deal of different types of capital chasing exposure to self-storage, and that's keeping prices elevated. We're lucky in that we have many different sources of proprietary or quasi-proprietary acquisition pipelines, such as our management platform, joint venture platform, and relationships we have in the industry. So we'll acquire about $1 billion gross of storage assets this year, about $600 million net, and we're happy with that level of acquisitions.
Marketing is an important part of the self-storage business. Can you talk about how your marketing strategy has evolved over recent years?
Absolutely. Marketing used to be, you'd find a visible presence and on a busy street and buy a big Yellow Pages ad. And with the advent of the internet, that's all changed. And almost all our marketing efforts are now focused digitally and SEO, web optimization, and data analytics. And we've become very adept at that to the extent we've been invited to sit on and have sat on Google's advisory committee. And we feel that's a competitive advantage for us that has driven our industry-leading results.
And lastly, can you touch on your thoughts about overall supply-demand balance in your core markets? And is there a near-term risk of too much supply in any of those markets?
We are certainly in a development cycle, and we're seeing a lot of new self-storage properties being delivered in many markets. We have a highly diversified portfolio across many primary and secondary markets, and we have exposure to markets that are right in the depths of the development cycle and will have significant impact in the near future. And we also have markets that are coming out of the development cycle, as well as markets where there's true barriers to entry and haven't felt the impact of new development. So we feel that diversified exposure will take the volatility out of our returns.
Joe, thank you so much for coming in.
Thank you.
And for more on REIT World 2018, be sure to visit NAREIT's website, REIT.com.